Hi, this is Mike Coval,
And Stacy Acevedo.
and we are here once again for another great, fantastic video for Income Trader Institute. And this one is all about how you're going to get paid to trade. Typically, in the stock market, we think, I've got to buy low and sell high. But that's not how real professionals actually trade.
In fact, you'll notice that most professionals, you know how they stay in the business for year after year after decade? It's because most professionals aren't buyers and they don't buy the trade.
Nope, they actually place what's called a spread trade or stay in the middle of a trade, and what we're going to teach is kind of the same process. Very few people actually learn the closely guarded trade secrets covered in this video. It's what will pay you and your family income for generations. You learn this, and there's no reason to actually have to have a job until you're 70, 80, 90, 100 years old. If you can have that monthly income coming in with a really safe, secure type of investment, the exact same way the floor traders trade, the professionals trade,
The big money.
it's going to be eye-opening, I think. Fantastic.
Yeah.
So here's the great debate. What's more important? A lot of people say, are technicals more important? And technicals really just mean I'm going to take a look at a stock chart. What's the trend of the chart? Where's the floor? Where's the ceiling? How high is it going to go? That's looking at a chart. And a lot of people just look at the chart and say, based on what I see in the past, here's where I think it's going to go, and they work strictly off of technicals.
Well, in the stock market, most people say, well, I don't know how to learn the market. I don't know about looking at all the fundamentals. Or when's the earnings? What's the CEO, the price to earnings ratio? What's all this information? And there's so many ways to look at a stock. And the professionals tell you, the consumer, how to look at it. But what's interesting is how they take it is a very different approach. They always are telling you, oh, we have to manage. Does it go up? Does it go down?
Yep, if you're not really sure about this, all you gotta do is turn on Fox Business News or CNBC or Bloomberg, and you're gonna hear two different analysts come on within a 15-minute time frame. One's gonna talk to you about why the market has to go up and the other why it has to go down. Which way is it gonna go? It's a great debate. It's what people are always interested in. Where's this stock gonna go?
But if you ever notice, though, the professionals are in the business whether the stocks are going up or down, and the professionals are always making money, even if it goes up or down.
That's true. You never see them really go out of business. So here's something recently we just pulled off of CNBC. We're talking about why so many people are confused here. So this is a recent one, and all these stories are from the exact same day. Now the first one I want you to take a look at is towards the top here. It says factory activity grows at a lower rate. Now this just means that factory orders and what's
It's
actually the
slowing.
factories are producing are slowing. Now you would think that would be bad news,
Yeah.
because if they're slowing, the factory's going to have to lay off workers because they don't
Less
have as
jobs.
much income coming in. That would seem pretty bad news.
Yeah.
But on the exact same day on CNBC, it says consumer sentiment jumps to an 11-year high, which means that even though the factory orders are slowing down and they're laying off employees,
Consumers are buying.
the consumers are buying. So
Huh.
that's kind of confusing.
Yeah, that is.
Which way are you supposed to think? Is that bullish, or is that to the upside, or is that to the downside? Now you've got next one, same day, U.S.
Year.
jobless claims fall. So if U.S. jobless claims fall, which you would think that would be good news, because not as many people are filing unemployment rates. That's what that means.
So they're employed.
So that means that they're working, which is kind of strange. So if that's the case, then at the very bottom, why does it say on
Oh
the
my
same
goodness.
exact day
Oh my
on CNBC's website, U.S. jobless claims rise to a 4-month high, which
know what?
means that jobless
Yeah.
claims fall. This is the same day on
These
the
are
same
headlines.
website. These are the headlines.
No wonder everyone says, oh, the stock market's so scary. It's so I have to learn so much. And you can never be, who really knows if it's going up or down?
Because I think everybody's just writing stories about what's out there, and you can skew any story to anything that you really want.
But the
Here's-
professionals, I mean, it's almost like they're trying to confuse you. So you have to use them.
I got it. So now if I'm confused, I'm going to give my money to somebody else, and they'll
Yes.
use it for their own purposes. Very well could be. So here's one here. It says U.S. single-family housing starts hit a 6.5-year high. What that means is new homes are being built. Good news.
Good news.
At the same time, mortgage applications rise on refinancing. So now you think, oh, the housing market, really good news,
Yeah.
correct?
Yeah.
But right beneath that, just about an hour later, home builder sentiment edges lower in January. So the home builders, even though everything's up, are feeling really negative. And at the
Wow.
same time, it says a billionaire who bet against housing reaps the rewards.
Wow. So you can either read all this news and then try to interpret it all, but you get super confused. And then when people get confused, they tend to get discouraged. When you get discouraged, you tend to give up.
It happens quite a bit.
And that's why people go to professionals. And professionals are the ones who stay in business for years and
Now,
decades.
you used to be a professional down in Beverly Hills.
A stockbroker.
And
Yes,
so
I was.
what does it actually take to become a licensed professional?
Well, it took a really long 6-hour test.
Amazing.
So, yeah, it's 6 hours. I had to pass a 6-hour test. But, I mean, it was hard. I got asked a lot of questions in those 6 hours. And basically anything over 70% or higher, you pass. You You can walk in being a Walmart cashier, you can walk out being a stockbroker. Isn't that funny?
And tell people to do with your entire life savings.
Yes,
Yeah.
because now you're the professional. And you look at those headlines and you're like,
And we
well,
wonder
I
why
don't
people are
know.
confused. Listen to what we're listening to.
Yeah.
All right. So here's the great debate. What if this entire time, instead of will it go up, will it go down? What if we've been asking the wrong questions the entire time?
Hmm.
Perhaps the real way to ask the question is, where do I think a stock is not going to go to? This way, if I don't think it's going to go, let's take a stock that maybe it's a $100 stock,
Mm-hmm.
and you buy a stock, you have $100 invested. It has to actually go up to make money.
Mm-hmm.
What if you just said, I don't really care where it goes? What if it doesn't go above 150 or below 50?
Okay.
That's a different question.
Yes, it
Where do I
is.
think it's not going to go to? Now, what if it doesn't go anywhere near 150 or 50, and as long as it doesn't go to either one of those, I get paid?
Wow.
Wouldn't that be different?
Yeah.
Then I
Yeah.
think maybe the odds are much more in my
So
favor.
now we're kind of turning the table to not trade like an average person says, I got to find the stock at 100 that's going to 150. But we're saying, who takes the other side of that trade?
Think about who does something like that that's very successful.
Well, Las Vegas, one of my favorite places to go.
Well, think about that. You go to Vegas and say, I
Mm-hmm.
want to bet on
The
black
casinos.
18.
Mm-hmm.
It has to actually go black 18 and you get paid out.
Yeah.
Who gets paid? The casino gets paid for every other one of those colors and
Wow.
numbers.
Yeah.
We're just becoming the casino. Where do I think it's not going to go? Now, the odds are going to be in our favor if we trade this way.
You
And
mean
again,
those big multi-billion-dollar casinos that have all the beauty and
where do they
all
make
the
their money?
cash?
They
Yeah,
made their money by betting
exactly.
where something is not going to go.
Yeah,
They're just putting the odds in their
interesting.
favor.
I love that.
Now, this is kind of a new way of investing for many different individuals. You've never really thought about this. What we've always been taught in the past from our parents and our parents' parents is you buy something low, you hang on to it, and over time it goes higher.
Mm-hmm.
Now, typically that's the case, but what if we're in a really messed up market and
Mm-hmm.
the stock market decides to drop for a while right about the time you're ready to retire? That's not my goal.
That's very
That's not my
scary
goal.
actually.
What we're going to do is we're going to actually show you in this little quick video here how to mimic the professional floor traders.
Mm-hmm.
The people who actually stay in business day after day, year after year, decade after decade.
Well,
How do they still make money even when the market doesn't go up
and
or
not
down?
even make a small amount of money. I mean, they make record amounts of money, lots and
Yep.
lots, and that they're consistent is what's interesting.
So we're going to actually show you how to get paid to place a trade.
Mm-hmm.
We're not looking to buy low and sell high. That is not in our vocabulary. That's not what we're after.
Because
We're
that's
gonna
really hard. Because that's kind of like throwing the dart. Because
Mhm.
nobody really knows where it's going to go.
Yep. And again, if you do that, you might as well go to Vegas and bet on black 18 or black 21
Yeah.
because it has to go there.
Yeah.
I don't care where it goes. As long as it doesn't go to black 18, then I'm going to get paid.
I love going to Vegas, but I hate gambling because I hate having to choose where is it going because nobody knows what number to pick.
Yep.
I like watching just all that money flow, but it's interesting. All that money is flowing into the casino's
That's
hands.
right. So we're only interested in where we think a stock or an index might not go versus it has to go up.
Okay, I like that idea.
Okay. So now, I know this thing is a little bit strange for a lot of you. You've never really been
Mhm.
taught to invest this way. So why should you think about this? Well, let's take a little about who we are. CNBC television. Anybody ever heard of that? I'm sure you have.
Mhm.
Stacy and I have created every course in the stock market that CNBC television has ever taught worldwide. This is
Mhm.
what we do for a living.
Mhm.
We actually teach traders at the Chicago Mercantile Exchange how to trade. We teach them the correct way to actually make money.
Mhm.
If this is what we do for the professionals, we're now going to teach it to you. We don't want you to actually be a retail trader. We want you to become the casino of the house and put the odds in your favor and get paid every single month. This is what we're going to try to teach you to do.
And our specialty really is we can talk the trader lingo, being a stockbroker and speaking on the exchanges and trading live in front of hundreds and hundreds of people. We can certainly talk the professional language when we know how they make money. But our goal here is to really bring it home to where you're at and bring it down to the language that you understand, something make it nice and simple that can produce an income for you. But we have we have taught internationally in many different countries around the world for many of the largest names out there. But now we're just saying that, hey, we're going to expose this secret that most people don't want to tell you.
Yep. So here's a chart of Apple. Now, I don't want you to worry about what the current price of Apple is or where it might be today or tomorrow or whatever time you're watching this video. It might be down a few points or up a few points. That's irrelevant. All we're really looking at here is just a chart. And I want to start to think about if we're going to look at a chart, where do we think a stock could be heading to or might not be heading to? And that's really what we're after. So the first part I want you to concern yourself here is this is a chart.
Mm-hmm.
Now, normally you'd say if it's trading right around 114, I'd have to buy it here, and if it goes up, I'd make some money.
Mm-hmm.
But it actually has to go up to make money.
Mm-hmm.
And you've got $116 per share invested. Now, the odds aren't going to be in your favor this
That's
is
a
going to
lot,
work
yeah.
out. because it has to go up. What if
Right.
it just goes sideways? What if it goes down? You've got two other directions it could go versus
Yeah.
one. So right off the bat, the odds are against you.
Well, right after, what was interesting here is when you buy a stock or when you buy an investment, you are forcing it to do something in order for you to make money. And that's really hard. When you start forcing something to happen in order for you to make money, then you're taking on a little bit more risk in that sense. Because what if Apple just goes nowhere? I mean, just goes sideways for a
Well,
while?
I'd still like to make money if it goes sideways.
Well, yeah, so would I. Well,
So
and
that's what, and
professionals
that's
do.
what we're going to show you going through here. All right. So first thing you see here, there's actually four different trends on here. For the first few months, the stock went sideways, and then the stock actually broke out of its sideways movement and went up for 2 months.
Hmm.
Then right about the time people saw, oh, this thing's really going up. I think I should go ahead and start buying some now because now it's in a new uptrend. Where did it go? And it immediately dropped, and people start to panic and they freak out. Oh, what am I going to do right now? That's okay. It's still Apple. I'm going to hang on to it. It'll probably head back up sometime in the future.
Hmm.
In the meantime, for the next 2 months again, it then just went sideways. So everybody
Interesting.
who bought a few months ago is still waiting for it to go back up. And it probably will,
Hmm.
but when? How
Right.
long do you want to hold on to it and
Right.
hope that it goes up? What if the whole time you're holding on to it and you know that it likely will go up?
Hmm.
What if we get a whole stock market sell-off and it pulls all the way back down to $80 or $70 and sits there for a few years?
Well, what's interesting is the whole time you're holding on to it, you're making nothing. When this is going in its neutral pattern or its sideways trend, you don't make any money, maybe unless the stock pays dividends or something. But the reality is, people hold on to investments when they're going nowhere and saying, "Oh, I'm investing," and really you're not. You have money in here, and you're saying only if it goes up can I make money, and that's you have a 1 out of 3 chance
Yep. So
of making money.
let's move on to that. So now what I want you to ask yourself is, if we've been asking the wrong questions the whole time, here's the two questions I want you to ask yourself, because this is going to change your thought process. When your thought process change, we can start actually making some income off of a
Hmm.
stock. Doesn't matter where it goes. So the first one I want you to ask yourself now is, where do you think that it won't go? So if I'm just back here looking at Apple,
Hmm.
obviously, if I had to guess, I don't think it's probably going to go to $94. Right down here at $94. I don't
Yeah,
think it's going to go there.
in the next, yeah.
Especially when the second question is, how long do I want to be in the trade before I make my money?
Yeah,
So we go
okay.
back, look at our chart. I don't think it's going to go to $94 in the next 2 days.
Well, of
I just
course
don't think
not.
that's going to happen.
Yeah, I don't think so either.
So when we start thinking of a stock this way, and as long as it doesn't go to $94 in 2 days, I can actually make some money on this trade. I know that sounds weird,
It does sound weird.
but it's how the professionals trade. And the
Hmm.
reason they don't teach this to you is because if they teach it to you, you won't give them your money. And
Hmm.
if you don't give them your money, how will they invest?
How can they make? Yeah, how can they make their billions of dollars?
So your
Interesting.
two questions going forward should always be, where do you think a stock won't go,
Hmm.
and how long before you want to be in the trade investment? So it seems kind of weird. Put it back into the casino, the house.
Yeah.
All right. If somebody bets on black 18
Hmm.
and they spin the ball one time, it
Hmm.
has to go to black 18 that one time.
Hmm.
So the question here is, where do you think it won't go? I don't think it's going to go to black 18 because I might have, and again, I'm not a gambler, so I don't really know how many
Yeah.
colors are on that.
I don't know
Wheel.
either. Yeah.
Let's just say that there's 50. And I know
Okay.
you guys are probably going to send me an email and say, no, there's X amount. So I've got 49 other chances that it's
Yeah.
not going to make it. The odds are in my favor.
Really?
Now, how
Yeah.
many times do you want somebody to spin the ball around there before? How many times can they land on a number
Hmm.
before it gets there? I'm going to give them one shot.
Hmm.
So what if you gave them 50 shots? Well, that was a little bit closer chance it could land on a
Yeah.
black 18.
Yeah.
So how long do you want to be in the trade? One spin.
Hmm.
And where do you think it won't go?
So I don't want to be in a long time, and because I want to make it safe. Or actually, I would like to get paid pretty quickly.
Well, let me ask you a question. How often do your bills come?
Oh, well, my mortgage payments once a month, my car payments once a month.
Okay, well then I'd like to be in a trade for once a month. I'd like to get paid every month so I can pay my bills.
But I have some bills that come maybe every week though. I got to
Uh,
get my pedicure once a week, and then the next week is my manicure, and the next week is my facial, and the next week I give to church. So I got some
it
weekly
costs a
bills
lot to
too.
look like you, doesn't it?
It costs a lot to look this good. That's
Okay.
right.
All right. So I don't think that. So the question is, where do I think Apple won't go in the next month? And I only
Okay.
want to be in a trade
Okay.
1 month or less because if our bills come every month, I want to get paid every month.
Sure.
I'm not in this
Okay.
for the long haul.
Right.
I want to get paid every month. My bills come every month.
And we're not looking to, pay off your house in a month. We're looking to just pay a bill in a month,
Yeah.
right?
Maybe you pay your mortgage payment each
So
month.
maybe not. So maybe be consistent and not too greedy here, but just a nice rate of return on a conservative basis.
Good. So
Okay.
in order to find out where we think it won't go to, first we have to learn a little bit about reading a chart. Now, if you're watching this video and you already know how to read a chart, you can kind of fast forward through that, or you can just kind of spend the next 3 or 4 minutes with us as we cover some basic chart reading.
Well, I would listen to every word because you just don't know. There could be a nice little pearl here. Now, if you are
You
brand
don't
new,
listen to every word, because whenever I talk, your ears just go out.
that's a good point. But if you're brand new, I don't want you to think, oh man, I got to look at charts. Guys, this is really an easy concept to pick up. We're going to be looking at a pattern. It's just like looking at a picture. You look at a picture and look at a pattern. What has the stock done in the past? It's not a guarantee of where it's going, but we're saying, you see, Mike has identified 1 month here, the movement of the stock for 1 month.
Each of these black lines coming across here shows you 1 month of trading. There's about 20 trading days, and we're going to try to keep this fairly simple. We're going to go into much more detail of what we're trying to show you here at your live training that you're going to go to. Right now, I want you to understand the concept so you'll pick it up by the time you get to your live training.
The live training is a fun class too.
So this is a 1 month section between these two black lines here, and there should be 20 trading days, and each of these little marks here is called a candlestick, and it just tells you where the stock open, high, low, close that day. But just figure it's kind of where the stock traded that individual day. So you can see between this month and this month, it moved from about a low down here of about maybe 95 to a high up here of about 103.
Okay.
So it moved about 8 points between the high and the low.
So I wish I would have bought at 95 and sold at 103.
That would be nice too.
That'd be nice,
and then wait for it to kind of pull back a little bit.
But the chance of that happening, you could be in that for a whole 6-8 months before that even happens. Or you could have bought at 103 and then watched it drop back down to 95.
Okay, so this is the chart we're looking at here. It's about a 6-month chart. You can see this is 1 month. This would be the 2nd month, the 3rd month, the 4th, the 5th. We're looking at about a 6-month chart on here. So that's the first thing I want you to see. So if this is a 6-month chart, understand we're going to be in a trade for 4 weeks or less. So I want a little bit of previous history about where I think it's going to go to. So if I know that each of these is a month, you can kind of get an estimate of how much the stock actually moves each month between the lows and the highs.
Okay, so what's its pattern?
We're kind of looking for a pattern. Good.
Okay.
Now the next thing I want to use is what's called a floor. Now all stocks have what's called a floor. It means whenever a stock drops, at some point the institutions say, hey, that's a really good price for Apple. It's now trading right around this level, and on this chart here it shows you right around 95. And I want you to be concerned about the current price of where Apple is today when you're looking at this. Just understand the chart here that, hey, Apple's around $95. The institutions, the hedge funds, pension funds, insurance companies, mutual funds, and banks, the big money buyers say, that's a really good price, and they start buying. And when they started to buy Apple right there, it went higher. Now at some point it went a little too far for them. They said, let's quit buying and see if we can stock get a pullback and we can't get a better price. And then every time the stock kind of got back to this level again, right in through here, they started to buy. That's called a floor.
Okay.
Now investors pick this up and say, every time a stock is near the floor, that's usually a good time to buy. That's where the floor comes in. Now you can see that eventually it broke out and rallied again. And then when a stock starts to actually go above a ceiling, which we'll cover here in just a second, you can kind of see the new floor right over here. Can you see the new floor?
Yeah, so when it changed patterns, it broke out of that particular pattern, and then it started to create a brand new pattern.
Right. So whenever stock breaks a pattern, it starts a new pattern. Then we see the new floor. Can you see it pulled back? There's a floor. Investors bought and it went higher, and then pulled back. Investors said, hey, that's a really good price. Let's go ahead and buy some more again right in through here. And then they went ahead and they bought some more again right in through here. There's a floor. Now if you look at a chart, after a while you just kind of draw a straight line between one floor and the next, and we could say if I just had to estimate right now if the stock pulled back, where do you think it might pull back to?
Ooh, the floor.
The floor, because that's where it pulls back, the floor. So after a while, investors start saying, hey, if it's done that 3 times in a row, if it pulls back a 4th time, there's a really good chance that's a good place to buy. Now if I know that's the floor and it does pull back, where do you think a stock might not go? Well, I think it could pull back to the floor. But I don't think it's going to come somewhere down where my mouse is right down through here.
I would agree with that too. Yeah. So
now I've just picked an area where I don't think it's going to go. So I'm going to go.
Like
I'm going to go outside of the floor to an area where I don't think it's going to go.
Okay. So we're looking outside of the trading pattern that it's creating to say, in worst case scenario, it could, but it's very, very unlikely.
Yep.
Okay.
Now,
I like
if
that.
a stock has a floor, it must also have a ceiling.
Okay.
So let's talk a little about the ceiling now. Now the ceiling just means every time the stock started to rally and go up where my mouse is right now here about
hits its head on the
about
ceiling.
102 or so, 104, it hit the head and then it started to pull back. Now people say, well, why did it stop moving up? Well, what happened was the institutions bought back over here at around 95, and as soon as they bought, it pushed the stock up. It took about a month for it to go up, and then once it moved up too far, they said, hey, it's moved up way too far too fast, and they just stopped buying. And when they stop buying in large quantities, it pulls back to the floor. Now that it pulled back near the floor, they start to buy, which pushed it up. They waited, they pushed it back up, and then it pulled back a little bit. So you can see the stock now has what's called a floor and a ceiling. Every stock has them. And when a stock actually goes through a ceiling, that becomes the new floor.
That typically does become, yes, so that previous pattern, even though it's left its previous pattern, when it creates its new pattern, it often looks very similar or takes lines from its previous pattern to create the new one.
Yeah, now you can see that there's a new ceiling over here as well, right here around 115 on the stock. Now these aren't always going to be exact numbers. You're not going to say, oh, the ceiling is exactly 115 and 11 cents every time. They're just areas that the investors say, I'm going to buy at this area or I'm going to sell at this area.
You know, it's interesting because when I first saw the chart, I didn't really see these, but now that you put the lines on, now it's very clear.
So if I just kind of go back, there's the original chart, but then you start drawing some lines on there, and it becomes, whoops, we got a little too far. It becomes a little bit easier.
A lot more clear, yeah.
A lot easier to see. So here's a chart with no lines.
No line, yep.
And then we kind of put them on there, the floors and the ceilings.
Wow.
Now it's really obvious.
Well, now I look at it and go, okay, so I could, based upon this, I could feel comfortable saying where I don't think the stock's going to go.
Right. So if I'm looking at this right now, where do you think it's not going to go? Let's kind of figure out. And using where you think it might not go, and again, the question is, where do I think it won't go? Now, I actually think that if it starts to drop right now, it probably will go to 105.
Yes.
Right? Because that's
too.
where we're at, 105 right down through here. Where do you think it won't go? I don't think it's going to come down here someplace.
Neither do I.
At least not in the next 4 weeks.
Right, exactly.
Right? So now, we kind of go through here and we decide if we're kind of watching this. Now ask yourself the two questions. Where do I think it won't go? And how long do I want to be in before I get paid? Well, we know the second question is easy.
Yes.
1 month or less.
Yeah, I got monthly
bills. Because your bills come monthly.
Weekly for me.
I'm not in it for the long haul. I'm in it for a profit. And since my bills come monthly, I'd like to make my profit.
So it's interesting, by taking a month or less, we're not really being investors, we're kind of being traders, but that's what the professionals are. Professionals are not investors.
Yeah, they don't call the people on
money.
they don't call the people on the trading floor. The Chicago Mercantile Exchange, where you and I do a lot of classes for the traders, that's the largest exchange in the world. They don't call those people floor investors.
No, they don't. They're called traders.
They're called floor traders.
And you know, it's funny because who gives the money to them? Investors give the traders money. And investors are the ones that say, no, it must move. The traders make money on every single transaction that comes through.
And that's what we're after too.
Yep.
Okay, so now, where do I think it won't go? So let's just draw some lines on here. I don't think it's probably going to go to 102.
I don't think so either.
Because where's the floor at? The floor is right around 105.
Yeah.
So what we're trying to do is we're trying to say, if the floor is at 105, let's go beneath the floor, because I don't think it's going to go there in the next 4 weeks.
Yeah, I'd like to go beneath the floor to make it more conservative. Too. Yeah, okay. For the next
and
month.
on the upside, if our ceiling previously on here, if the ceiling was right here around 115 or so, right in through here, let's go up here to about 121.
Oh, okay.
So if we go between 121 and down here about 102, if we place this trade, we're going to show you how to place a trade here in just a second, or some basics to it. We're going to teach you so much more and get to your live training.
Yeah.
You guys, but you don't want to pass that up. It's going to be some fantastic information. But if we do this trade right here, and this stock, Apple, in the next 4 weeks trades anywhere in between these lines and doesn't go above the ceiling or beneath the floor, you'll actually get paid.
So Apple could go all the way up to the 120 and back down to 102, back to it can move this 20 points up, 20
anywhere
points down,
in the next 4
20 points
weeks.
up, 20, and you still get paid without even, wow, that's
now
nice.
That's different than it has to go up.
I know.
It could go up, it could go side, it could go down.
I know.
And really, you don't really care where it goes. As long as it stays between those two lines, you get paid.
So I don't really have to worry about, did it go up today? Did it go up today? Or what happened in the international news? Oh, Apple dropped 10 cents. You don't care about that then. That's the nice part.
So now, this actual trade, if we take a look at this, when we were doing this recording, I pulled up the actual quotes on how, and we haven't kind of got into
the live
the very
quotes off the exchange.
This was the live quote off the exchange. For every $5 you invest, you'd make $1 profit if Apple stays between 121 and 102, anywhere in the middle there. So in
this 30-day time frame.
In the next 30-day time frame. It's actually about 28 days from the quote that I picked up.
Okay.
But it seems kind of strange, but this is how the traders are making their money. They don't care where it goes up. If they invest $5, they're going to bring in $1. In fact, you actually, when you place this trade, you get paid the $1 right off the bat. So when you place the trade, the $1 goes into your account. So if you're only investing $5 but you made $1, you're only investing $4.
So it's kind of like
that's a 25% return on your invested money in the next 4 weeks.
Because of the $5, you already got $1 back. So worst case, you only have $4 at risk. On your $4 at risk, you actually made $1, and you get paid like as soon as you hit enter, the $1 comes in your account
immediately, the same day. That's your
Nice.
dollar. That's your dollar for the rest of your. You just made a dollar per
Wow.
share. So if you
Wow.
do 100 shares, you just made $100.
So
Now you
basically,
don't. Now you don't have to own Apple. The point here is we're not buying Apple. We don't own Apple. You don't want to own Apple.
hmm
You're trading where you think it won't go, and as long as it doesn't go there, you get paid.
so I'm the casino. You're the person coming in.
hmm
You're putting $1 on Black 18,
hmm
and I have $5 maximum that I could lose, but I've already collected your $1.
Yep.
So I only have $4 max I could lose.
Yep.
You spin it once, and you have it, and you're as an investor, it must land
hmm
on your Black 18. If it doesn't, I make all the money.
You get it correct. So the point was here: you place this trade, you're gonna have
hmm
$4 at risk because you already made a dollar,
hmm
and you're gonna get paid 25% on your money if the stock goes up, sideways, or down. And you
Wow.
don't own Apple. You don't want to own Apple. It's not your intent to own
Wow.
Apple. You don't care which direction it goes.
Wow.
Now,
I
are the
love
odds in
that.
your favor that it'll go up, down, or sideways?
Yes.
Okay, so it's probability. If there's a fourth way, you got to let us know ASAP because we have to redo the video here. So if it goes up, down, or sideways, we make 25% of our money.
Wow.
And so
In the next 30
we're
days.
going to invest $4 per share in a
hmm
trade and make $1. You say, well, who'd take that trade? And the answer is,
hmm
it's a little bit further than this video goes to here, but the answer is the exchanges,
The
the market makers,
professionals.
professionals, they have to take your trade. If you place this trade, they have to take the trade. They can't say no because they're the ones that actually posted the price $1 for five. So as soon as
Mm-hmm.
they posted the price, they're saying this is for sale.
Yep. Yep.
And so
Wow.
you get paid right off the bat. Now,
Wow.
for me personally, now this would be kind of a trade that you might place
hmm
because this is Stacy over here on the other side of this microphone here. She's a little bit more aggressive than I am because it costs a lot
To
to.
look this good.
Mhm. And
Yes.
I'm a guy, and we don't always have to look the best at all times. So I'm a little bit more conservative, don't need quite as much money. I would place maybe a different trade and go here.
Oh, so you by widening it,
So
right? Okay.
now, by widening it where I think it might not go to, I'm
Your
going to
floor
get
and
paid
ceiling.
less money. Now,
Okay.
this is still for every $5 I invest, I'm going to bring in 40 cents immediately. So I've
hmm
got $4.60 invested because you get paid 40 cents right off the bat.
hmm
That's still about 8.5% on my money.
Wow. And the next,
I mean,
yeah,
think about it. I'm still going to make about 8.5% on my money
in the next month.
on the next 24 days as long as it stays
Wow.
between those two lines.
And yeah. So basically, you've raised the ceiling. So now, as opposed to my 10-foot ceiling, you gave yourself a 20-foot ceiling.
hmm
Wow.
Now, you think
Okay.
about, so what if you said, what if I want to be even further apart? You could go further apart and you'll
hmm
just get paid a little bit less. So at
Wow.
some point, the real question is you still ask yourself the very first question on this page here, where do you think it won't go? And that's the level that you're going to actually sell at.
Wow. That's
So,
so interesting.
so a lot of you are, I think right now, this makes absolutely no sense. You guys are just crazy to even bring
hmm
something like this. And the
hmm
point is, this is exactly how we teach the traders at the largest exchanges in the world to trade. This is what Stacy and I do.
Well, and
We're
this is
just teaching it to you now
hmm
so you can understand the same concept.
well, and this is what the institutions do. Whenever you give them money, this is how, because most people say, I would like to buy the stock and it must go up. When that stock doesn't go up or it goes sideways, they make money every single month.
Yeah,
And so we're just saying now you need to step in that job, in that position, and you need to start pulling money in like that professional.
think of it just like a bank. What do you think a bank does when you give them when you
hmm
open up a savings account? Maybe you give them $10,000. Now again, I'm just making up a number here. But you give them
hmm
$10,000. Do you think they put that in the vault and say, "Don't touch this. It's Mike's money or Stacy's money, and we're going to give you right now 0.1% interest on your $5,000?"
You know what the banks are doing now is they're giving their money to brokerage firms and they're
Uh-huh.
trading it.
And they're trading it, or they're loaning it to somebody on a house loan. And so they're
Or
using
credit card.
credit cards for a credit card for 18%. So
18%.
you give them your cash, they give you 0.1% return,
hmm
and they give that same money because it's their money now
Yeah.
to somebody else on a credit card for 18%. So
Wow.
they're learning to use the money effectively. We're trying to teach you the same thing. When you
And
give your money to a brokerage firm, the brokerage firm doesn't leave the money sitting there. Even though it might be invested, they use that as collateral to make the real money for themselves off of your cash.
it's
And this is how
interesting.
they're trading.
It's interesting because you keep saying when you give it to a business. So a business, when you treat this as a business, you tend to be more consistent in your returns. And we look for the safer return, the more consistent month after month after month. So when, whether it's the banks or the broker, how do the professionals stay in business and how do the professionals constantly grow year after year after year and have record numbers of profits and earnings? It's because trade secrets like this that nobody wants to teach you this. And if you look at this, you go, oh, this is kind of confusing. It's really not. We can break this down for you. And Mike has actually created a fantastic, fantastic system that you're going to see how to do this on a very simple basis. You can make it real complicated if you want, or you can keep it really, really simple and conservative. I mean, your son at 13 years old.
14 now.
I know, but at 13 years
It
old,
is
he was
actually
placed.
is
Yeah,
trading these type of trades.
yeah,
Absolutely.
because you taught him this. In fact, your wife wanted the weekly checks like me, right?
So she trades a little bit differently. She wants the weekly checks, huh?
But your son said your son kind of is following in your footsteps more so, and he says, "Gosh, if, on a monthly basis, if I could do this, because I could either go to work at McDonald's, or I could just find stocks and learn, like, study the charts, and say, well, where do I think this is not headed?" But
Place the trade, and now this is his business. That way he has time to actually go to after-school sports and study, which is very important to me. So instead of having an after-school job, which a work ethic is good, I want him studying in schoolwork right now and playing sports. And so he can actually have this as his paycheck. Really,
yes.
really cool. So this is 40 cents on $5 invested. So let's say that you had about $5,000 to invest. Every month, that would be, as long as it stays between those two lines, about $400 in profit every single month. And at the end of the month,
Wow.
you get your $400 profit, you get to keep it, plus you get to use the $5,000 all over again. It doesn't disappear. You get the same 5,000, you just reuse it over and over and over again.
So 40 cents profit on the, say,
On a
416. That's over 8.5% a month.
in a month.
That's amazing. A month.
That's pretty cool.
Wow, and there's 12 months in a year.
Now, we would
Wow.
never ever tell anybody to put their entire portfolio into one individual trade.
Oh,
The reason
gosh,
for
no.
that, now you went from a logic trade to an emotional trade. And when
Yes.
emotion kicks in, you stop following the rules.
Yeah, there's definitely some rules to follow here. And so the concept is fantastic, and we do this all the time, but there's very specific rules because we always want to say, who knows what could happen in the market? You still have to have protections. The key here is we're looking for safety and consistency.
Yep. All right, so now some of the benefits of this. Based on how you trade, if we're going to trade an index or a stock, both of them are fantastic. But let's say you're going to trade maybe just an index, and an index would be something like the Dow or the Nasdaq or the S&P 500.
Okay.
And you can trade that without actually owning it. It's not my goal to own the S&P 500.
Yeah.
I don't want to. I just want to make money from its movement or lack of movement.
Well, ultimately, you just, yeah, you don't necessarily have to own something. Maybe you just want to control it.
So I can do this on some indexes, which means there's no searching. I don't have to run any kind of fantastic searches. I don't have to learn how to analyze a stock. Is the cash flow good? I don't have to worry about when their earnings actually come up. I don't have to worry about who's the CEO, because this would be an index of all the stocks combined. So if one stock does poorly, you're just playing at the whole index.
That's nice. You don't have to worry about big surprises. Yeah.
You can also just trade an individual stock like Apple. Maybe you own Apple or don't own Apple, but you like Apple and you watch it all the time, and maybe so I just want to trade one stock that I'm really familiar with, comfortable with, and do the same one over and over because you get to know it inside and out.
But it seems like it'd be higher risk with just one stock versus
it is slightly
500 stocks.
It is slightly higher risk because Apple every 3 months will come out with an earnings announcement, which could send the stock dramatically up or down and make it change its pattern. An index is less likely to have that happen.
Or a CEO change. I know one of the big huge companies in the country just had their CEO has to retire because of bad earnings. So things like that can really affect your stock's price, and we don't want major swings in the stock necessarily outside its normal pattern. So I like sticking with a big huge package of stocks like the index.
I also like the fact that you don't have to worry about what the stock did that day. Did the stock go up that day? Did it go down that day? Stock or index, whatever trade.
Yeah.
Because what you're saying is, I don't really care where it goes as long as it doesn't go above or below the lines in the next 4 weeks. This way, you let the stock trade its normal movements. Let it go up a little bit, let it go down a little bit, and let it move around. It's going to move anyway, so you don't have to freak out. It doesn't make any difference.
Well, yeah, and that way your day is free to go do whatever you want. I mean, I volunteer at the hospital. I do lots of volunteer work, and I don't have to worry about what's the market doing now. What's the market doing now? I know I'm getting paid.
And because these expire every month, you get a paycheck every month. You can also use these to get a paycheck every week, which we might cover on the video. I'm not sure, but we will definitely cover this in much more detail at your live trading. So you can actually work these so that they expire. The trade's only good for 1 week or good for a month. You can choose however long you want it to be good for.
Yeah, you can customize this because we know that every person learning this says, my circumstance might be different. My circumstance is different than Mike's. And so I customize this. I take the system and I customize it. I want to keep it as safe as possible, but I'm looking for the consistent, and of course I want high returns, but I don't want to be greedy here. I don't want to risk my ultimate dollars and be in the poorhouse. I just want to be smart like this. If the professionals can make money like this, why can't I?
That's exactly right. So here's your new goal now. Instead of my old goal, buy low, sell high, and I'm in it for the long haul, which is perfect for the institutions, so they can make our money, which just really puts you into an institution. Your new goal is this. I'm going to place one trade a month for a monthly paycheck. And you can place it any time in the month that you want, but it'll expire sometime towards the end of the month.
So wait, one trade a
One
month.
trade.
That's amazing. Just
and
one.
and you don't care where it goes.
Wow.
It can go up, down, or sideways.
Oh my gosh.
And so you're going to get a paycheck every month. Now, what I like about this is you can be young, you can be old, you can be active. You can say, hey, I'm 80 years old and can't get a job anymore, but I still need monthly income. As long as you can look at a chart, you can say, I don't think it's going to go there. A market maker on one of the exchanges will pay you money as long as it stays between those two lines. And then, again, you ask the question, why would they do that? And the answer is because they have to. And so there's much more detail of why they have to versus this video.
And we'll teach you that at the live training.
They have to take the trade.
If it's listed out there and there's an actual number of a quote,
as long as they put the price out there, that means they're saying I will take the trade. Now, again, the further away you go, the less they're going to pay you. So you could say, well, I don't think that Apple's going to go to $2. You're probably not going to get paid for the trade.
Right.
So you have to have some amount of reason inside there. Now, remember, this style of trading is how the floor traders actually make their money. It's how they stay in business every day, every week, every month, every year, regardless of which way the markets go, because they're making that profit. So some really cool things about this, and there's many ways to place this. I know, Stacy, sometimes you place one of these trades like you just did the other day. It was only good for a couple of hours.
It was less than 60 minutes. It was good for like 55 minutes.
And so
that was awesome.
She took a trade. Says as long as it stays between these two lines the next 60 minutes, she makes money, and it stayed between the two lines in 60 minutes, and she makes money.
Well, you know why? It's because Macy's was having a really big sale the next day, and I wanted some money for shopping.
Was it their biggest sale of the year?
It was the biggest one-day sale, of the year.
But they'll have another one in 4 days. So questions you might be asking yourself now, a lot of what-ifs are going through your head because this just sounds crazy to you. So what if you think the stock or the index, whatever it is that you're trading, might actually move outside of those two red lines?
Because it could happen.
What if it actually goes higher than the ceiling or lower than the floor on those two lines I drew?
In your time frame.
Now, there's many different ways. The easiest way is as soon as you think that's going to happen, close the trade. And you say, well, how do I do that? Right now, until we show you how to close a trade, and you're going to get good at this because it'll become second nature after a while. It's like, well, how do you drive your car? Well, when you teach somebody brand new to drive the car, there's so many things you have to teach them first versus how to drive the road. You got to teach them how to get in the car, where the steering wheel is, where the brakes, the gear shift. You have to teach them all parts of that.
Yeah, you should practice. Once you first thing is you got to learn the concept. Now, learn the style and start practicing, and then practice your rules.
Right. So the answer to that would just be then,
Call your broker.
Call your stockbroker and just say,
help.
Close the trade. And all you got to do is say, I'm in the trade. I think the index is going to move higher. Will you close the trade? And they will, because that's what they do. That's their job. So they will actually just do it for you. All you have to do is think it's not going to work anymore. The trade is not going to work out. Just call them and say, close it, and they will just close it. They know how and what that means.
But you're going to want to learn to do it yourself, because they will close it at probably the least advantageous time for you.
Yeah.
So you want to make sure. I would never call and say close the trade unless I'm out in an African safari and I'm not near a computer or something. But like you were on the African safari.
Photo safari.
Yeah. So in Africa. So, but I would actually learn how to adjust this myself, because you can say, based upon what's happening, there can be a very quick and potentially profitable way to close this out.
It's like, okay, so good. So second, what if you actually forget about the trade? What if you said, oh, I placed the trade and I got paid immediately, but then something happens and I forgot that I got into the trade?
You know what's funny? Your wife did that.
She did that.
When he taught her this. She doesn't invest at all. She's not put money, not a trader. He showed her the system. She was like, what? You mean if I actually do this and this, I make this money? And so they placed the trade. She hit enter. Cash came into her account.
She got paid immediately.
She took the money and ran.
In her mind, the trade's done now. I just got paid.
Completely done. Yeah. And so she forgot that 24 days later, when it expired, she forgot to place another one, because she's like, I already made money. And that's for people who go, what? You mean I can do this again the next month and again the next month?
You're using the same money over and over and over again.
Yes.
But you're just making money off that same amount of money.
The same seed money every single month.
Yeah, so if you forget about the trade, as long as it stays between the two lines, the whole trade just evaporates. There's not even a reason to close it. There's no way to close it on the trade. So there's nothing to do. Once you place it, you've already got paid. So as long as it stays between the two lines, there's no follow-up action. There's nothing else to do. The whole trade at the end of your time period, whether that's a 1 week trade or a 1 month trade, the whole thing, it just evaporates.
Couldn't get easier than that.
Because you've already been paid.
Yeah.
Now, what happens if it doesn't stay between lines and goes outside of that. And we're going to show you what to do in that circumstance at your live training. But for the basic part is your broker will handle that for you.
Okay, so worst case scenario.
Because they're actually required to.
Yeah, worst case scenario, you go, well, I'm super scared, or I've never done this before, and no, because it looks really simple. Find the floor and ceiling, and place your trade, done.
Yep.
But there's very specific rules that go along with this, though. It's kind of like, you get in the car, you buckle up, you start the car, you start driving within the lines. But there's a lot of things you have to know as you're driving that car, just to get really, really good at this.
So now, next question. So what if it stays between the lines the whole time? And again, no follow-up action. Now you might ask yourself, what if I just say, I like this, but I'm not going to do this because I'm really happy with my mutual funds, or I'm happy with my annuity, or I'm happy with whatever I have. What if I just leave it where it's at right now and don't do a single thing, and just continue to work and just leave where it's at?
Well, yeah, let's take a look at those results.
Yeah, let's go ahead and take a look at that. Right now, I'm at Morningstar.com, or this is off of their website, and this was taken just a couple of days before our actual
recording here.
And Morningstar.com, if you're not familiar with the company, is the #1 website in the world for tracking, analyzing, managing mutual funds.
All mutual funds. Over 30,000 of them.
So there's over 30,800 mutual funds in their database. And so here's what this takes. Now, when we did this recording here at the very beginning of the year, it tells you, if we just kind of go down to the very bottom of the list here, it says all funds on average. And there again, over 30,800. Top of the column, year-to-date return. So far, year-to-date return for all mutual funds, all 30,000, their average return so far for the first month so far is 0.14%.
0.14.
Which doesn't seem bad, except that their benchmark, what they're all trying to beat, is just the current marketplace. And the marketplace is the S&P 500.
Which has done 3 times better.
Which is more than 3 times better. So you're over here at 0.5%, which just tells you that all the professionals, if you just leave your money where it's at, you're going to underperform the benchmark.
And all their fees they're taking out, all the costs associated that you don't actually see. When I was a broker, just the monthly income that I would make from people just keeping their accounts doing nothing, I would make so much cash off that each month.
Would it be beneficial if the people just left their accounts alone, just left them there with you?
That's called an ideal client.
It's an ideal client because you get to use their money. It's like a bank. You put your money in a savings account. The longer you leave there, the more they can do with it.
And there's so many hidden fees that the client gets hit with a client that constantly are paid to me and to the boss and to the brokerage firm and for the electricity and all that. There's tons of fees.
So then you might say, well, is that an anomaly? Is that always that way? Well, let's just go to the second column. This is the last year return, not year to year, but the last 12-month return. Last 12-month return, if we kind of go down the bottom here, all mutual funds on average gained about 4.69%, and the stock market itself was up 17%.
Wow.
So how could these mutuals, now these are the professional money managers, people who are paid hundreds of thousands, millions of dollars a year to manage your money, how can they underperform the stock market? If they're just buying the stock market stocks anyway, how are they underperforming?
What's interesting, folks, is you can just buy the S&P 500, but most people give their money to a professional, and their professionals on average are getting 4.69%. If you just did this yourself, the market itself was 17.28%. It's because of all the fees, and many of the professionals aren't very good. They really aren't. Now you're paying them, and some of them are fantastic, but the reality is maybe you should learn this yourself. If you take this into your own hands and learn this, maybe it takes you, a month, 6 months, 8 months, maybe a year to get really, really good at this. My gosh, you can still outpace.
Look, it's just, well, then maybe a 1 year's anomaly. Here's a 3-year return. Mutual funds, 10%.
Oh, my goodness.
Stock market, 18%.
Every single year.
5-year, 10%, 15%. Look at this. Even over the last 10 years, mutual funds are trying to get better. 6% versus 8%.
And did you know the mutual funds' only goal is to outpace the index? That is their only goal. If they can outpace the index and do better than them, then they even get bigger bonuses. But did you know all these mutual fund money managers, they're getting huge, huge, huge bonuses.
Yeah.
And where does that money come from?
Comes from everybody else. Now here's an interesting fact. There's never been a single year since Morningstar.com has been tracking these mutual fund managers and the actual S&P 500 that the mutual fund managers as a group have ever in history outperformed the stock market.
Wow.
So the question is, why not just buy the actual mutual fund that tracks the S&P 500?
So why doesn't everybody do this?
There's not enough money in the actual fund managers to sell you that fund versus what they're putting you in right now. Interesting. So
Hmm.
now let's go to next one. Now mutual funds are one way. Let's go to hedge funds. Now hedge funds are usually the best of the best. And here's kind of how it works.
Hmm.
You get out of college and you go to business finance school somewhere, some nice Ivy League school,
Hmm.
maybe Wharton,
Hmm.
and then you get hired at a big, huge name brokerage firm like Merrill Lynch or Citi or
International, some international firm as
a
well.
big international
Hmm.
firm, and you do really well through there. Then maybe you start off and you go to
Become an
working at an
analyst.
analyst. Maybe you
Hmm.
start working at a mutual fund, managing some money, a little accounts. You get bigger and bigger, and you become a really good mutual fund manager. Then you get to the top echelon, you become what's called a hedge fund manager. Now, a hedge fund manager manages money for the top world's one percenters.
Hmm.
There's very strict restrictions on who can put money into hedge fund and who can't. So
And
these are the top.
the reason why they're so good is because they have virtually no limits on what they can do.
Mm-hmm.
It's very open ended to what they can do.
Mhm. So this is over that same time frame right here, and this was coming off of Bloomberg. Hedge funds are shutting at a rate not seen since the financial crisis, as many managers post disappointing returns, and an elite group of firms dominate money raising. Then we go down through here, and it
This
says
is in the year when the markets returned over
17%.
17%. They're
It says
actually,
hedge funds on average have returned just 2%
oh
in
my
2014.
gosh, oh my
Their worst
gosh.
performance since 2011, according to the information out through there. So this is when the market's doing well. Hedge funds, and again,
There's so much
this
more
is where the
risk you're
top one
taking on.
percenters put their money.
Hmm.
And so the point is,
You know what's interesting though is hedge fund managers, they usually aren't the ones filing bankruptcy though.
that's
Hedge fund managers are usually the ones that live on the water
yep.
somewhere.
So they might have closed those hedge funds because nobody's putting the money because they're not making money. What do you think of those hedge fund managers? Still making money. They just get hired another
Lots
hedge
of
fund.
money, lots of
Yep.
money. So whether or not you made money, they certainly did. It's because they're the professionals in this business.
Yeah.
So we're teaching you here the strategy, the secret is now take that professional style of trading, what we're going to do, but we're going to do what they do, but we're going to make it much more conservative. Because you know what? If I'm just, Stacy Housemaker living at home and I need to make a monthly income, I don't want to take the stress that those floor traders have to take.
Yep.
So I want to put a trade on for just a month until my mortgage payment or the American Express comes,
Yep.
find a trade, make it as conservative as I want. I can customize it,
Now
make it
they're
more
gonna yeah
aggressive, more conservative.
they're going to do a lot of with their money, what we're teaching you right now, but they also
Hmm.
put a lot of money into invest in other businesses they think are IPOs and things that
Hmm.
don't always work out for them. That's why they're not doing very well. It's not because of what we're showing you here.
No, they take
Yeah.
much higher risk.
Right. So the question was then, what happens if I don't do anything, just leave my money in the mutual funds? That was the
Yeah,
whole point is
yeah.
you're just going to underperform the marketplace. If the money's there and someone's coming to your door and saying, let me try to do this, I want to take advantage of that because my family's financial future is very important to me.
Well, it's kind of like someone lays out a whole bunch of cash on your coffee table and you go, oh, I'll just take a $1 bill. You're leaving cash on the table. You go, oh, but I have to do extra steps to get that. But you know what? This is a learnable skill. You can learn this. You don't have to be some MBA from Ivy League. This is a very great way to trade that we don't want you, as long as you follow the system and follow the rules, you're going to learn how to make consistent money for the rest of your life.
All right. So the first thing that we know is we ask ourselves the question, where do I think it's not going to go and in what time frame?
Hmm.
In order to do that, I've got to figure out a little bit of the stock's trading pattern. A lot of it's called what's called a trading range. Every stock and index has them. It's
Hmm.
the amount a stock or index moves up over a period of time and
Hmm.
created from buyer sellers. And the
Okay.
trading range on this one here would just be, I can see the stock every time it pulls near the floor about
Hmm.
175,
Hmm.
and every time it gets near the ceiling up here somewhere right here around 200.
Hmm.
Correct? So this would be the stock's trading range. So this stock has a trading range between 175 and 200. Now
Hmm.
that would be the trading range for a stock. So as long as I can identify those on my stocks or indexes,
Hmm.
I can then go way outside of those to kind of figure out where I think I want to put my lines.
Okay.
Right?
Okay.
Now here is the S&P 500. Now this is again the benchmark, and Stacey and I both like to trade this quite a bit because it's the most actively traded contract
When it's so
in the U.S.
large,
marketplace.
it's much safer because now you're saying the movement of the top 500 stocks altogether, which is I think of it like a big cruise ship.
Right. So instead of one stock with earnings or news for one individual stock, this is the top 500 stocks you've heard about. This
Yeah,
is your IBM and your
all combined.
Facebook
Yeah.
and your the other. I guess we're kind of running on
AT&T,
AT&T,
Dow, yeah.
ExxonMobil, Verizon, all of them. So these
The
are the
big
big
stuff.
500 companies, McDonald's in America,
So you don't have to bet on one stock. You're saying basically on the
the whole
the
marketplace.
top 500 stocks in the U.S. economy.
So right now the kind of goal here is to see where trading range is. So if we
Hmm.
just go, this would be the last 4 years, and I don't really care when you're watching this video because
Hmm.
we're not using this specifically for the example to actually place a live trade. I just want you to kind of help
For training purposes.
for training purposes
Hmm.
to see a range.
Hmm.
So I can see that in January over the last 4 years,
Yeah.
the average rate or here
of this
2.3%,
major index.
4%, 5%, 3.6. So if I had to go into the next January, maybe the next year, I would say there's probably not a good chance that this is going to move 8%. Based off the numbers through here. Maybe that's where you would put your floor, or your ceiling would be 8%.
Yeah.
Does that make sense?
Yeah, or even make it more conservative, 10%. Because now in 2015, you might say, okay, we always think the market's more volatile than the past, even though history does tend to repeat itself. You can say, well, I'm really conservative because I'm brand new.
Yeah.
So,
What if you go down here to December? Look at this one here. You had a 0.9%, a 0.7%, a 2.5%, a 4%.
Not
so you
much
kind
off.
of see a trading range starting to develop here. You'd say, well, maybe this one here I could go to, maybe, because you want to try to maximize how much money you're going to get with the least amount of risk.
In December, I need more cash for Christmas gifts.
And so you could actually maybe put those lines, your floor, a little bit closer, because it's not the trading range is a little bit smaller in those months.
Interesting. I never thought about it that way.
Yeah. Okay, so that's kind of one way. We're just kind of help look at trading range. Now, the trading ranges that we like to look with, to work with here when we do things, we search for a probability of 95% of a stock or index staying between the floor and the ceiling.
Saying it's not going to go. There's a 95% chance it will not go to this floor or to this ceiling.
Great. And we found that usually gives us the best rates of return for how much we're investing, how much we receive cash, for how much risk we have in an individual trade.
The best amount of safety, yes. Now, we did this. This is the hardest part of this trade, though, guys. This is where people lose. We have spent years and years and years, our whole careers, finding these numbers. And Mike has back-tested.
Decades,
Mike has back-tested thousands and thousands of data points to get to this particular probability.
Yeah, and for that probability, and I'm not going to go into too much for this proprietary algorithm, but we use put-call ratios, implied volatility, Greek volatility indexes, standard deviations. We use a lot of information for this.
I don't want to know all that. I just want to know where to put my lines.
Right, so that's what I want to know. Where do we actually put the lines? So following those algorithms, here would be like a typical trade for us, something we would be interested in for what we're after here. And so this is what a trade screen looks like a little bit. And it would just say whatever we're trading. Now this one here, we're looking at the SPX. And again, we can look at an index or a stock. Okay. I like the SPX because it's all 500 stocks.
General as possible. Okay.
Yeah, so let's just look at a whole index versus an individual stock.
Okay.
So when we took this, the index was right around 2029.
Okay.
That's where it's trading at. And we put our ceiling up here at 2170. In other words, we're saying as long as it doesn't go from
161 points.
So that's about 100.
That's a lot.
About 140 points.
Okay.
In the next, this is a 24-day trade. As long as it doesn't go 140 points to the upside in the next 24 days,
which is like over 1,000, 1,400 Dow points. That's
or about 170 points to the downside.
Wow.
So we're saying this is our floor right here, the February 20.
4 weeks
that would be the February 20th. These are options. Now, don't get too hung up, I guess, thinking, what am I looking at here? I'm going to show you what this looks like in more.
Oh, your training will teach you all that stuff.
And at live training, we're going to go much more detail. But basically, here's what it looks like. As long as it stays above this floor and below that ceiling over the next 24 days,
you get paid to do the trade.
95 cents per share.
Wow. Okay. So
now there's a $10 investment here, because this is where we're selling. This is where we're making our trade at. And we actually, for every trade we do, we actually buy insurance. So we actually pay a little bit of money for some insurance, just in case it really breaks those numbers, because I don't want to really have too much money at risk.
So let's say, like for your son's account, so let's say we have $1,000.
$1,000.
So if on your son's account, if we had $1,000, your son's 13, 14 years old, so he would make $95 off his $1,000.
$95 off his $1,000 investment in 24 days, as long as it stays beneath this ceiling level here and above this floor level here, you'd make $95.
Now, let's say on your wife's account, let's say she has $10,000. Okay. So
that would be a $950 profit in the next 24 days.
Wow.
And then after the 24 days are up, the entire trade just evaporates and goes away. There's nothing to do. It just goes away. Then you get to use the same $10,000 again and make it $950.
So that's like a 10% return in the next 30 days.
A little over 10%. It's pretty cool.
Do you realize you could just do one of these once a year and you would still outpace all the mutual fund money managers?
You don't have to do anything for the next 11 months.
Right.
Or you could just do it again, or you could say, I'm going to take a couple months off.
Wow.
But I like about this because it can be done for busy people who travel a lot too.
Yeah.
So on that trade, here's what it looks like. With the index, the SPX, trading right around 2029, that's right where that black line is.
Okay.
If that's where it's trading, you can see the 2170 is way up here. As long as it stays beneath that, and you can just see, like, on a monthly basis, how much does it normally move.
Yeah.
We're probably pretty safe up through here.
Yeah, I would say for
and
the
on the
next
downside,
24 days.
we're way down here. Now, this is next 24 days. So the next
Wow.
24 days it stays between those lines, we make some good money.
Now I noticed that your lines are a little bit skewed right now. They're not necessarily even. Why is that?
That's a good question. So you can see that the ceiling is
Mm-hmm.
closer to the current price and the floor
Mm-hmm.
is further away.
Mm-hmm.
And the reason for that is all of those data points we talk about
Mm-hmm.
from what's
Thousands
happening
and
in the marketplace,
thousands.
there's over 3,000 data points, are all pointing to the stock market moving a little bit lower.
So that has a more probability of it
So it's
possibly
a higher
dropping.
probability that the market will actually be lower in 24 days
Mm.
than higher.
So we want to make more conservative. So we want to allow a lot more room for it to move down,
Hmm.
so we don't have to sweat this trade.
Yep.
So
And
if I actually place the trade right now, and as of this recording, what this black line is, I place this trade. Let's say if I have $10,000, at $950 goes in my account in 24 hours. I
It'll
can
be done in
actually just
24 hours.
I can just transfer that to my checking account
Hmm.
and then go directly to Macy's or wherever, Saks, and then is all I have to do now for the next 30 days is stay between that floor
24
and
days.
ceiling.
Stay between
Wow.
those floor and ceiling in the next
Love
24 days.
it.
And then
See,
at
everyone
the end of
should do
24
this.
days, the whole trade just goes away.
Goes away, and then I get to do it
Just disappear and do
again.
it again. Yep.
Cha-ching.
That's
Payday.
95 cents for every 9.95 invested. Now you choose how many you want to do. Do you want to do
It's $9.05, not $9.95.
yes, you're correct. That should be $9.05 and not 9.95.
Mm-hmm.
Okay, good. So you
Mm-hmm.
choose how many you want to do. Do you want to do 100? So that would be $1,000 invested, or do you
Mm-hmm.
want to do 200 or 300 or 500 or
Shares.
1,000 or
Yeah.
10,000? That's
And
really up to
and
you.
you can customize that, and that's going to be based upon when you come to your live class. We'll show you about the risk and how to calculate what's best for you.
Mhm. Now we're
Okay.
going to show you actually how to place these trades at your live training here. But
Mm-hmm.
this is an order entry screen from one of the really large brokers in North America.
Mm-hmm.
Now we don't really care who you use. Do you
Doesn't
want to
matter.
use your Schwab, or you want to use E-Trade or
Mm-hmm.
Fidelity or TD Ameritrade or Merrill Lynch? Or I don't really care who you use. You're able to do this with all the different brokers.
Mm-hmm.
And here's an order entry screen from one of those large brokers that I just mentioned here.
Mm-hmm.
We were just placing the SPX,
Mm-hmm.
which is the S&P 500 index, and it just says buy. And so these are the trades you do. So you do this as one individual trade.
So you're
One
placing the
individual trade.
floor and the ceiling with your
Mhm.
insurance. Okay.
And it should
So
cost you about, based on who your broker is, if you get the correct commissions, we'll talk about those at your training. It
mm-hmm.
should cost about $4.50 to place this trade.
Okay.
About 4.5 bucks.
Okay. So place this. So I load this in here based upon whatever the lines are telling me,
Hmm.
based upon your
So
algorithms.
here's the lines. This is you had
Mm-hmm.
one line here, sell
Mm-hmm.
at 2170.
Mm-hmm.
That was the ceiling, and
Mm-hmm.
you had another line at 1860. And again,
Okay.
I want to go into much more detail at your live training with
Oh,
this.
sure. Yeah.
I just
Because
want you to understand the basic concept right now.
in fact,
You
at the
get the
live
basic
training,
concept after this,
yeah.
you're in good shape.
In fact, at the live training, you're actually going to place some of these, which is
Yep.
great, on your paper practice account. So I can actually just enter these 4 lines and hit enter, and then $950 comes in my account.
Mhm. Yeah, you change the quantity, but it's still going to be,
Sweet.
you know,
Yeah. Yeah.
yeah.
$95 would be
For
my
every
account.
one of those, one means 100.
Okay.
So don't worry about that part right now. We'll talk about that later.
So
But
if this is your
this
son's account, he
this
get
is this is
$95.
exactly what the order screen looks like. It looks
Nice.
exactly just
That
like
looks
this.
pretty easy. That looks learnable for the average person. They could learn
Yep.
this.
So now, after you place that trade, you hit the enter button and you
Mm-hmm.
place a trade. Now what? And the question is, when can you do it? Usually I place all my trades at nighttime when the markets are closed to be filled
Yeah.
sometime the next day when they're working. And the reason
Yeah.
for that, because that's when most people go to work. So you don't have to do this during the daytime. Just anytime at night's good.
Well, most people you come home from work and you're home, you're quiet, you can look at this, place your trade.
Mhm.
That way, during work hours, if you do work or volunteer or whatever you do, you don't even have to think about the market really.
Yep. So now,
Okay,
each night when
that
the
makes
markets
it
are closed,
easy.
you come home from work late at nighttime. I don't care what it is. The markets are closed at 4 o'clock Eastern time.
Mm-hmm.
Just go back and look at the chart of whatever you traded. If it's still between those two red lines,
Mm-hmm.
there's absolutely zero for you to do. Log off,
Do
go back and
nothing.
do whatever you want to do. You're done for the day.
That could take you like 30
It
seconds.
could take you 2 seconds if you already had the chart up.
It could take you
Yeah.
5 minutes, but I mean that's about it though. Wow.
Yeah, for some of us it takes a little bit longer for that
Right.
modem.
Yeah, that telephone
that
modem.
dial tone to kind of get
Uh-huh.
up there. But if it looks like if you look at it at nighttime, again, don't worry. I don't care where it goes during the daytime. You guys
Mm-hmm.
go out and enjoy your life. If the markets are closed, you come home from work and you're
Mm-hmm.
taking a look at this, and it looks like it's heading really close to one of the red lines,
Mm-hmm.
call your broker that night or the very next morning and just say, I need you to close the trade, and they will close the trade.
Mm-hmm.
And the trade will be done. You'll be out of the trade.
So worst case scenario,
Mhm.
but you're going to actually learn how to do it yourself
Yeah, we're going to
because
show you how to close it at your live training.
yes, it's because it's much higher chance
So
of profit
as
there.
you go through this, I want you to actually learn as much as you can as you go through this, because instead of
Mm-hmm.
just relying on your broker the whole time to place the trades,
Mm-hmm.
the more you understand about how this trade works and you're able to place those trades yourselves, the more comfortable you'll be with the trade. And then it gets even better because you'll teach this then to the rest of your family. You'll teach your spouse, you'll teach your kids, you'll teach your parents, you'll teach your grandkids, you'll teach them them to do the same thing, because it doesn't matter if you're old,
Doesn't
young.
yeah, the stock market doesn't know who's placing
The
this
stock
trade.
market has no
They just
bias.
say here's XXX,
Hmm.
here's this trade. They don't know who you are.
Yep.
And that's the nice thing is, and you can customize this, make it as conservative as you want. Like if I'm going to do this for my mom's account, I want to make this as super safe
You
as
might only say,
possible.
I only want 4% a month,
Oh gosh,
and move
four
those lines
percent a
even move the
month.
lines even further apart.
4% a month should be ecstatic. Absolutely.
Okay, so open or close the trade. Now it gets even easier than this. So far we've been covering some nice areas here, but it gets
Hmm.
even easier than this. After the stock market closes, what if you could come home and say, well, what's the likelihood? I know it's getting close to that red line,
Yeah.
but what's the
Yeah.
likelihood it actually might go through the red line, because I'm panicking a little bit? Because some
Yeah.
people will.
Yeah.
Because in most cases, it's not even going to get close to it if you're nice and conservative.
But it certainly could.
Because the key here is
Hmm.
consistency along with some safety.
Hmm.
I want to be consistent and make a
Hmm.
profit. So what if you could actually have a nice little box you could type in
Hmm.
what the SPX, whatever your trade is, what your trade is currently at right now,
Hmm.
and then you choose the expiration date, and then you type in the ceiling
Hmm.
and the floor and
Hmm.
hit submit.
Okay.
We've already done that for you. So at that point, as soon as you hit submit, this little box pops up right over here to the right hand side. It's automated, and it just tells you.
That is so cool.
And it comes up with what's called a trade management number, TMN. If that number that pops up as soon as you hit submit is between 0 and 10%,
Yeah.
it means there's a really low chance that your stock or index where you're trading is going to
Wow.
go
Love
through
that.
the floor or ceiling. In other words, it pretty
Don't
much
even
means
don't even worry.
it
Go
just means
go
don't
do
even
whatever
worry
you
about it. It
want.
just
Yeah.
means log off, go back to sleep.
Nice.
Now,
Nice.
if you hit the submit button after typing those numbers and the
Hmm.
number comes up between 10 and 31,
Hmm.
your little needle will be somewhere in here. It just
Hmm.
means that's where it's normally going to be in most cases.
Wow.
And so it just means that's where it's supposed to be. It just don't worry about it.
Okay.
If
So
it's
don't stress.
if
Okay.
it's if that number you hit is at 31 or higher, your trade management number
Hmm.
is 31 or higher, it means, hey, in the next couple of days, or maybe the next 3 or 4 days, there's a really high chance that number is going to move above the ceiling or
Okay.
beneath the floor based on
Okay.
whatever numbers you typed in there. So if
Okay.
that's the case, that's when I would just call my broker and say, please close the trade for me if I don't know how to close it.
Well, and I would actually, yeah. So when you're brand new, that's what you do. But the reality is, you learn how to adjust this.
Yep. As you get better, some of you are going to say, hey, I want to treat this as a business.
Yeah.
I'm not after a little bit of monthly income. This is going to be my business. I'm going to work it for the rest of my life. How do I maximize that profit? And there's many different ways you can actually adjust the trade if it comes up with a close of trade and actually make more money because you're wrong. That's a little bit more advanced, and we're not going to cover that part right
Yeah.
now.
And some people do that.
I
They,
just want you to know that, hey, you're probably going to, the first few times, freak out if it gets anywhere near the red line.
Hmm.
Type in the information in the box that we're going to show you how to do that, and the
Hmm.
numbers will come up for you that tell you, hey, you're in really, really good shape based on
Hmm.
where it's at right now, or it's in normal range, don't worry about it,
Hmm.
or hey, it's time to close trade. I just make it easy.
Yeah. Now I know some people are go. Well, you know what? I mean, I take a long time to learn this. So the good news is, you learn this at your pace. You make it, you customize it to your specific income need and safety need, and you go, I really want someone to hold my hand. Don't worry, guys. There's mentors that can help and walk you through this.
If that's your personality, absolutely.
Sure,
Yep.
absolutely. So depending upon what you are, when you come to the live class, we're actually going to force you to start placing some of these trades and start going through the practice modules
That's
of
what the
this.
paper trade account is for, so you feel comfortable placing a
Hmm.
trade. And you can go back and look at it each night and check each night and see, had it actually been a live account, not my paper trade account, I would have made $500 in the last 3
Cha-ching.
weeks. Cha-ching.
Yeah, that's
Yep.
nice.
All right. So
Yeah,
some people say, you know what, Mike? I
I don't.
just don't have enough time to log on each night and go onto the internet, type in my numbers and look at it.
We
That's
do
3 minutes.
hear
That's 3 minutes of my time.
that.
I don't have time for it. Or I'm just too busy.
Oh my goodness.
So I'm gonna make it even easier. We now have nightly email updates that come directly to your email. So once you go back and you
That is
place your trade,
so
you come
cool.
back to the check your current trade, and there's
Yeah.
a new box now right next to that actually
Hmm.
has an email address right under it. You
Hmm.
type in the same information and your email address, and now every single night you're going to get an email that comes directly to your email.
Hmm.
And if you have one of the new smartphones these days,
Your son actually got
mhm,
this, and it was cool because he was actually at his basketball game, pulls it up on his cell phone. Oh, first of all, he didn't realize the market closed, and he got an email saying, "Here it is. Your trade management number's 4%."
yeah, this comes up about an hour and 15 minutes right
That's
after the market closes.
amazing.
An email comes to you and it just says,
That is the
hey,
coolest thing.
today, based on what you're trading, whatever you traded today
Hmm.
closed at this price.
Hmm.
This is your expiration for your trade, which is 24 days out. This is the ceiling you traded,
Hmm.
the floor you traded,
Hmm.
and now your trade management number is 4.0. In other words,
Wow.
4.0 just means that you are in excellent shape.
Wow.
What that means is
This is all the work you're doing. I mean, you don't even have to think
Or
about
even
this
go
again.
back and look at the chart.
Nothing. You don't have to put on your computer or anything. No, yeah, that's
Yep.
amazing. That
Or
is the coolest part.
if it's between 10 and 30, which is where
Mm-hmm.
it normally is, it just
Mm-hmm.
means that's where it's supposed to be anyway.
Mm-hmm.
But if you get this email at nighttime and it's at 31,
Mm-hmm.
the trade should be altered or closed.
Mm-hmm.
Then you just want to make sure you just call your broker and say close the trade for me if you don't know how to alter it just yet. And then you go back and just hit unsubscribe from this so you don't keep getting updates on a
Yeah.
trade you no longer have.
You know, I can't tell you how much
This
I've
just
used
makes
this.
this
This is
fantastic.
amazing. I've used this on several of my trades, and I cannot tell you just the amount of stress when I pull that up and it pops up at like your trades at 10%, and then now it's at 5%, 2%. I go, wow! It just takes this whole weight off your shoulders, knowing,
Mm-hmm.
wow, this is amazing. I don't have to do anything else.
Now, these are the proprietary algorithms that we've created with over
Mm-hmm.
3,000 data points, but we check your trade for you every night based off of historical numbers
Mm-hmm.
and what the markets are expecting going forward. It's fantastic. It's like you say, you don't have to look at it anymore. You just say,
Mm-mm.
you know, I got my cell phone. Oh, my cell phone just said I got an email at 5:15. I know exactly what that is.
Mm-hmm.
So I just click on it real fast, and all I'm really looking for, I don't even care what the expiration date is. I don't care what
Right,
the number is.
right.
I'm just immediately focused on that number right there.
Make sure it's
And
30,
it,
30%
and
or
ideally, as
less.
long as it's 10 or less, I just immediately close it. If it's
Wow.
yellow and it says between 10 and 31,
Mm-hmm.
I'm in good shape, but I might look at it a little closer to see how
Mm-hmm.
close is it.
Sure.
You know, like is it like 29.999? You know, is it?
Right.
I might look at it, then I might go back and look at the chart.
Yeah. What's
But
its pattern now?
yeah,
Yeah.
but it just like you say, it just makes it really easy. It takes all the focus off. You don't have to stress about it. Just look for your email,
This is
and we all have
fantastic
emails.
for
We check
people.
our emails every day.
Of course,
Yeah.
absolutely. Yeah. This is
So
fantastic.
pretty cool. Now, next question you might ask yourself, well, where can I place trades like this? I mean, why haven't I been doing this in the past? And
Yeah.
the answer we said is so the institutions can use your money,
Mm-hmm.
but you can do this style of trading in almost any kind of brokerage account there is, including every kind of an IRA account
Mm-hmm.
and many different 401k accounts
The
or
rules have
any
really
brokerage
changed.
accounts.
The
Yeah,
rules have really changed a lot. You know why? Because the government is saying, gosh, people like you or me, I mean, you're much older than I am. So when people like Mike or
18
myself,
seconds.
when people like years, when we get older, Social Security is not something we can necessarily rely off of. So the government has really opened up a lot of the rules for trading this within your IRA or your retirement accounts, my Roth IRA, things like that.
A lot of different 401k accounts, or if you just
Hmm.
open up a brokerage account, put some money into it.
Like your son, you
Uh-huh.
opened up his account.
Yeah, and the reason for that, you know, a brokerage account is also, most brokerage accounts come from a lot of big banks. They all pay interest, and almost every major brokerage account
Hmm.
pays more interest than a bank savings account.
Hmm. I know when you started kind of putting all this, you've been working for years and years on this, and when you put this together, I know you got your son involved. You know, he's a teenager. You got your wife involved, who's a housemaker, and then you got your mother-in-law involved.
Hmm.
You know, got our parents involved, and this is something that you can teach everybody, and that's why it's so important. You go, gosh, I know I can outpace because there's got to be a way I can make money. It would be kind of like if Vegas said, "Hey, come to this class. We're going to teach you how to open up your own casino."
Hmm.
Where we have a 95% chance you're going to make money off everyone who walks in that door, is what they're saying. This is
Yeah,
amazing. I
it's
love
pretty
this.
cool, and I really like the fact that it doesn't matter how old you are
Mm-mm.
or where you come from. The market has no bias. You can teach this
Hmm.
to your entire family, and you can
Yeah.
still do this at any age.
Well, and you know what? Maybe you still work. And, you know, like I said, we keep active because we love to keep busy in a lot of things. But even just for a portion of your money, you can just say, okay, for the rest of my life, if I just had $10,000 of a nest egg just earmarked for this, I could be pulling off, you know, let's be conservative, you know, maybe only 6 to 8% a month.
Hmm.
Gosh, I mean, yours are showing how, you know, a little bit higher rates of return, but if you just use that same 10,000 month after month after month after year after year after year, that's amazing.
It's some pretty cool
I
stuff.
think every single person should learn this. I really do. This can change your life.
Okay, so more information on the strategies. The first thing we would do here, and the goal of this video here was to kind of show you what you're going to learn at your live training. Many of you are going to go through a webinar. Some of you might actually be at a live class. But the real goal here was to show you what we're going to cover in more detail so you can start to grasp some of the concepts when we brand new the first time. Now,
Well, and this is to show you that, you know what, don't waste time. Come to your live training because this is important stuff. The sooner you learn this, the sooner you can actually press the enter button and have cash come to your account.
yep, and it's very important. I want you guys to ask lots of questions when you go through your
Hmm.
training because you're going to have those questions because this is the first time this is the first time in this video you've ever heard of something like this, and it's not new. This
Could
is
be blowing
exactly
your mind right
yeah,
now,
this is
actually.
exactly how Stacy and I teach the traders at the
Hmm.
exchanges to trade here.
Hmm.
Ask lots of questions when you get your live training. I want you to understand this because this is going to change your family's future for the rest of your life,
Hmm.
right?
And
So
take lots
ask,
of notes because the rules are very specific. It's like driving a car. There's very specific rules. You stay within the rules, stay within the boundaries, you're going to do fine.
mhm.
But there's always rule breakers out there. Remember when you were a teenager, you broke rules, Mike. Remember that?
Two of them, I got in trouble both times.
Yes. And
Yep.
now you don't break rules. And so by asking the questions and taking lots of notes, come to your live class. Get here as soon as you can because at your live class, we're actually going to have you place these trades immediately
Yep,
in your paper
we're going
account.
to show you how to open up a paper trade account, and a
Super
paper trade
exciting.
account just where you get to trade these strategies for free without any real money at risk,
No cost.
and it
Yeah.
just makes it easy. And then so you place the trade, so you'll see how to place a trade. You'll then go type in your actual trade information
Hmm.
into the trade management numbers, and you get an email each night based on your trade. And it really is a fantastic way to kind
It's
of
an
get into the
amazing way
and
to
test
start
it.
it and
And what you're going
practice
to
it.
see is that as you start making money, you're going to say, okay, I'm ready to start with the real cash right now.
Yeah. So
Yeah.
just think, by learning this, how long are you guys going to wait and start making money? Because it
Yep.
can be as soon as you want. It's all up to you.
Yep.
In fact, your future and your income are now in your hands.
That's pretty cool. So
Hmm.
call our event staff if you have any additional information on or need additional information or classes if you're interested in more. And we're looking forward to seeing you at your training, whether
Oh,
that's for the webinar or live class.
yeah.
Hopefully that's coming up in the next few days.
Yes, we are very, very excited to have you come to class and to teach you this because we have seen this firsthand with our own families and with our friends and with our other students, how this has changed their lives. So come on to the class, guys. We cannot wait to see you.
All right. Thanks, everyone.
Thanks, everybody.